Hello, everyone. I'm Andrew Reed, Juris Doctor, Small Business Development, IT, and Marketing Guru from sunny Victoria, BC. Follow me for new podcasts on beginner investing in business as I survive, grow, and prosper in a post-COVID Canada. Disclaimer: my podcast and YouTube content offer very generalized information that has been beneficial to me. Always do your homework and due diligence and make sure that any moves you make are in your own best interest. Nothing in my content is any kind of advice, and continuing to listen constitutes acceptance of this disclaimer in its entirety. Welcome to Series 8 of Wealth Hacks, numbers 71 through 80. Let's go ahead and get started. Number 71. Not all wealth hacks and finance tips, etc., will apply to you or benefit you. This goes for all of the vast information that is available on all financial topics. The best outcome that I can personally see mathematically is to analyze as much information as possible to filter in the beneficial knowledge, and then concentrate your sources after that for efficiency, as in find the ones that are giving you the best information and best benefit and focus more on those. One little tip here: be very wary of confirmation bias. This is when you are analyzing new knowledge as to whether it supports your current narrative, rather than just being fair when you're listening to it. So don't just listen to things that support what you already believe. That's what confirmation bias is. It's best to assess with a cold, hard, deductive logic as far as you can. Number 72. If you are granted a second chance on a stock or crypto, other than Bitcoin, that has gone down since you bought it, and by this I mean, say it comes back up, you've exceeded your value, but you feel like the fundamentals aren't really there for a bigger push, and it stalls out there when it's coming back up, well, don't give into greed here and think, well, maybe if I just wait and it will come back up. I mean, maybe it will, but that's one heck of a gamble. One that I've seen more advanced investors than myself fall prey to, as well as myself. So if it falls and you're just hoping every day for it to come back up so that you can sell it, and then it does actually come back up, don't give into the greed emotion that appears. Always stick to your plans, to your strategies, even if it is a hold until break even strategy. Better luck on the next pick. That kind of plan. So note, I don't include Bitcoin in my strategy here. Bitcoin to me is much like a savings account. Not really necessary to sell it. And if you have gains on it, you don't want to incur a capital gains tax on it for selling. And given its long-term potential, I personally at least just let it sit and go up in value over time as it becomes more and more scarce. That's the plan anyways. And I also keep a significant amount of the Purpose Spot Bitcoin ETF, BitCB, as I call it, BTCY.B on the Toronto Stock Exchange, because the yield on the stock has typically been at least over 7 or 8% on a monthly dividend payout, and it's been a consistent, strong payout monthly. So I've had this for a few months now, and it's still doing an excellent job. So I'll continue to report back on BitCB. And it doesn't seem to exactly track Bitcoin and its volatility, but more so that of the stock market, the tech sector particularly. It's interesting how it's separate in its tracking. And right now it's less than $5.50 Canadian. So I think it's an absolute bargain, in my opinion, for this ETF right now. It is worth doing your due diligence and checking into it. Number 73, in a volatile market, check your portfolio often to capitalize on sudden spikes that may come and go just as quickly. So many apps allow you to set alerts and notifications at price targets. Wealth Simple allows 3 free alerts, and you can get more with their premium package. Um, and you might be able to make some extra money on surprise swings that way to meet your threshold level at least. Right now, if my threshold level can be around 10% for a non-defensive stock, for a growth stock, so I'll take the profit. Remember some of my other tips to layer in and layer out. You don't necessarily go all in and all out with your position um, at every point. So check out my other podcast for more information on layering in and layering out. Okay, so you can always reestablish a position, and you can and should layer in and layer out, which basically means don't buy or sell all of it in one chunk unless you're executing a pre-made plan, like in the previous tip. Um, so if I see a big defensive stock like HUTL on the Toronto Stock Exchange, which is a ETF, a covered call ETF of global energy, if I see that go up 10%, I'm going to sell around 10 shares or 10% of my holdings at a time, keeping most of my position, but then taking a little profit too. And then reinvest that money into something that's on sale in this bear market, preferably something with dividends. That's my personal strategy, at least. Number 74, changing cell phone companies can hurt your credit score. Um, so, credit bureaus average the age of all your credit accounts. So, if you close an account that is 5 years old to save $5 a month by switching, you may significantly reduce your average credit age, as closed accounts no longer count. And a brand new account will seriously bring down um, that average credit age. So keep that in mind before casually switching accounts. Can your existing company perhaps be convinced to give you whatever deal you're about to get? It's certainly worth a try. And note this also goes for so called sister companies like TELUS and Kudo or Rogers and Fido. So the credit bureaus count them as being completely different companies. And remember, if you damage your credit score or your credit rating, then you'll get higher interest rates on borrowing. So you could end up spending a lot more than you save if you're damaging your credit. So just be wary, my fellow Canadians, because the better your credit score, better your chances of getting lower interest rates, especially in this time where the government continues to increase the base interest rate, which is pushing all the interest rates up. Wealth hack number 75, get a neutral third party perspective. So, over time, it is easy to get caught up in your own biases, fears, and self imposed limitations. And if you're in the same crowd, then again, you may be just trapped in that relatively confined world of thoughts and beliefs. So, a life coach or another third party might be able to shine a light to help guide you to new things. So, if you're feeling stagnant or on a plateau, break open that shell with a third party perspective. Wealth hack number 76, maximize and multiply your passive income streams. I say this a lot, but in this hack specifically, I'm talking about getting paid to walk. So, every step, pay me. Some apps that pay you to walk are Optimity and WinWalk. So, it's not a huge payout. I'm not talking about a windfall here, but why not get paid for every step? So, this might be a possible exercise incentive as well. And, I can't say this enough, health equals wealth. And it's the most important thing you can spend your money on, but when I get paid for being more healthy, even better. So I prefer out of those two between Windwalk and Optimity, I prefer Optimity as it gives you the chance to redeem uh, gems, which is what you earn for walking, into more points or Petro points. You can also get gift cards, other things, but I want more points, occasionally Petro points. So more points are the save on foods, reward points, and Petro points are from Petro Canada and their network, respectively. So if you would be so kind to hook me up for my wealth hack efforts and you get Optimity, you can enter my referral code, which is ANDRE 63703. ANDRE 63703. So please jot it down, grabbing some paper right now. ANDRE 63703. Thank you, thank you. So note, if you use a Huawei watch and you want maximum steps in either Windwalk or Optimity, you're going to need the Google Fit app, and you'll have to sync from the Huawei to the Google Fit, which requires a third-party app called Health Sync, but it does a decent job so far. Do note that getting a third-party app, all this stuff is going to require giving a lot of permissions to read your health data. So make sure that you're choosing consciously here when you're giving away your health data. So it's time to get paid for every step you make. So check out the Optimity app. And again, please write down my referral code if you'd be so kind. ANDRE 63703. Thanks, guys. Wealth hack number 77. Find mentors. Find people and knowledge resources. So they don't have to be actual humans. They can just be a resource of knowledge, but that are somewhat ahead of you. It doesn't have to be drastically ahead of you. Ideally, somebody that's just a few steps further than you are, so that they have that fresh knowledge from where your point in time is in your journey. And so find these people or resources, learn from them, and apply this knowledge to your goals as needed. So again, these don't have to be personal friends. They could be YouTube channel hosts like Meet Kevin, for example. But if possible, strive to make up your peer group of people, your friends, with similar goals as yourself, and even better, with various degrees of advancement from you. I mean, that'd be ideal. You're not going to get every single person in your peer group like that. It's unlikely, but certainly a goal. And learn from them. Not everything they do will apply, but some of it will. And every tidbit of knowledge that helps you along your personal path is absolutely priceless. Wealth hack number 78. So Google Finance, it's an app, great app. I love it. And it has a list of futures markets in there. So to get there, install the app, of course, look at the top of the app's homepage, and on the left, look for the words compare markets. Then slide that text line to the left with your finger until you get to futures, and check that out. And so remember from the most recent podcast of mine that futures will allow you to somewhat predict what color the stock market will be in the morning at market open if you're checking at night, or what the direction of the stock market will be. So if the futures are all green, then expect the stock market to go up because people are betting that it will, and it tends to pull in that direction. And if it's mixed green and red in the futures, then it's probably going to be volatile all day. So there may be opportunities in there, but it's going to be rough waters, so be careful. And then if it's all red, well, things could be pretty ugly. This could be, though, a good opportunity to buy a dip. So checking out futures, which you can get to with the Google Finance app, which I find to be an extremely useful app. Wealth hack number 79, and this might seem obvious, but I'm not sure I've emphasized it enough, so I'm going to go ahead and emphasize it again right here. Buy in bear markets. Buy when things are down and people are scared and people's investments are bleeding. That is when you buy, when the sell-offs are happening and things are at the bottom and people are like, why am I even in stocks? That is when you buy, because eventually it will come back up. Bull markets are dangerous times to buy, but ultimately that is when most people buy. Literally, most people buy. That's when most people come into the stock market for the very first time. That's when they buy. So just remember, buy low, sell high. Buy low, sell high. Simple but effective formula. Stock up on the sale stocks And always remember, you can't time the market. Wealth hack 80, don't fight the Fed. When there's quantitative easing, the money printer goes brrr. When the money printer goes brrr, then stocks, Bitcoin, and other cryptos tend to attract. They tend to attract investments and investors, increasing their price, increasing their values, which creates this cycle of fear of missing out, which continues to push the prices up. Conversely, when the Fed does quantitative tightening by increasing interest rates and selling assets on their books, well, riskier assets, most assets, tend to lose investors. And then current investments are reduced in value, causing decreases in spending, causing fear, causing liquidation, causing people to hoard their cash, if they have any, perhaps to the point where the entire economy of the country fails to grow for 2 consecutive quarters. In other words, a recession. So don't expect things to turn around again until quantitative easing is back on the table. Otherwise, it could be what they call a bull trap in a bear market. So prices overall are trending downward, and while they're occasionally spiking back up, they're going typically less up than they were the last time they spiked because it's trending downwards. This is a bad market to attempt to win in, although, again, there's always opportunities here, especially if you're doing swing trading, buying low and selling high. But if you're investing long term, this is just a good time to survive on strategies like, number one, dollar cost averaging, continuing to buy the assets while they're on sale, keeping in mind that they could get even cheaper. Number two, keeping relatively high cash levels so that you can scoop up on what seem like extreme dips. So, number three, dividend income asset purchases. So, stuff that pays you to own it so that you can keep the cash flow rolling. And finally, number four, diversification or asset bundling so that you can minimize extreme downward spikes as much as possible. One example being an index ETF that tracks a large number of stocks, or maybe a large REIT, a real estate investment trust ETF, which contains diverse types of real estate. Something where if one or two of the individual holdings starts to fall dramatically, it will be averaged out by the ones that are still holding steady. Keep in mind that if we were in a bull market, over diversification can keep you from getting major wins because as certain individual stocks spike upwards, the ones that are not are going to average you out. So it's a balance, but as a defensive play, diversified asset bundling can help you hedge the risk. So concludes today's podcast, Wealth Hacks Series 8, 71 through 80. Stay tuned. I should be back within about a week or so, a week to 10 days. I am writing the Federation of Law Societies NCA exams in the next 2 to 3 months. So these may be more erratic than usual, but do stay tuned because I am full of ways of saving money and trying to prosper during these relatively ridiculous times. And I intend to, and I hope that you will set your intention to winning as well, if it's not already. Best of luck out there.
Do you have any Instagrams you would like to share with us before you go?
Get the latest real-time updates from my Instagram at Canada Stock Market. At Canada Stock Market. Check out my entire catalog of podcasts completely free at anchor.fm/Canada Stock Market. Anchor.fm/Canada Stock Market.